Why did Amazon become a giant corporation with over $500 billion in revenue? The answer is simple. It's not retail. In 2023, Amazon's revenue reached $575 billion. But the operating margin of its e-commerce business is less than 3%. Retail operates on extremely thin margins. Why is this crucial? This slide explains everything. The e-commerce retail business operates on a thin margin structure with an operating margin under 3%. Intense competition and delivery costs squeeze profits. To sustain this scale with retail alone, high-profit sources like AWS and advertising become especially critical. Meanwhile, the AWS cloud business achieves ultra-high profitability, approaching a 30% operating margin. This single business generates roughly 2/3 of all operating profit. Subscription services, including Prime membership, generate stable revenue exceeding $40 billion annually. The advertising business generates over $47 billion annually, making it a major player in the U.S. digital advertising market. And infrastructure investments at a scale of $50 billion annually create a structure that continuously reinvests profits. This represents a transformation into a technology and infrastructure company, not a retail company. This is a fact proven by Amazon's annual reports showing segment operating profit, advertising-related revenue, subscription revenue, and capital expenditure trends. This isn't speculation. This is analysis established through financial data. And this is comprehensible. The numbers tell the story. Follow the financial statements. Now you can understand Amazon's business model. Today I'll show you that data. First, let's examine the reality of the e-commerce business. Operating margin under 3%. This is extremely low even within the retail industry. Shipping and fulfillment costs represent a large proportion of revenue. Price competition with rivals constantly pressures margins. Infrastructure investments of $50 billion annually are required. This is a capital-intensive business model. However, in 2023, the North America segment's profitability improved significantly. The international division also reduced its losses. Overall, the revenue structure is becoming healthier. Here's Amazon's real cash cow. AWS. Operating margin approaching 30%. More than 10 times that of the e-commerce business. In 2023, AWS operating profit was $24.6 billion. This single business generates roughly 67% of the company's total operating profit of $36.9 billion. According to research firm estimates, the cloud market is dominated by the top 3 players, AWS, Microsoft, and Google. Cloud services have high fixed costs, and profitability improves as utilization and scale expand. However, ongoing investments in costs like electricity remain necessary. And now, infrastructure demand for generative AI is exploding. Generative AI services like Amazon Bedrock are driving annual revenue by billions of dollars. AWS has entered a new growth cycle. The Prime membership model isn't just a service. In 2023, subscription services overall generated $40.2 billion in revenue. Membership is publicly stated to exceed $200 million. However, fees vary by country and plan. In the US, it's $139 annually. In Japan and India, the pricing is lower. According to external research, Prime members tend to have higher purchase frequency and spending than non-members. Free shipping, Prime Video, and music services lock in customers. Cancellation rates are extremely low. This creates a long-term revenue foundation. The growth of the advertising business cannot be overlooked. Over $47 billion annually. A major player in the U.S. digital advertising market. It comprises search ads, display ads, and sponsored products. This represents retail media. Purchase history data enables highly precise targeting. Advertisers can expect high cost-effectiveness. In Q1 2024, revenue accelerated to $11.8 billion, up 24% year-over-year. Furthermore, in 2024, Amazon began introducing ads on Prime Video. Revenue acceleration from capturing TV advertising budgets has begun. Further expansion is expected. Infrastructure investments reach a scale of $50 billion annually. A three-tier structure of warehouses, distribution centers, and last-mile delivery networks. Additionally, this includes AWS data centers and power procurement. Recently, with generative AI demand, data center investments and power constraints have increased in importance. In the short term, this pressures profits. However, this creates barriers to entry that are difficult for competitors to replicate. In some regions, same-day and next-day delivery rates have increased. Delivery speed is accelerating. Long-term, reducing logistics costs and improving service quality secures competitive advantage. This isn't merely a cost. It's strategic investment. Amazon's business model is a circular structure. The e-commerce business functions as customer touchpoints. Low prices expand market share. AWS and subscription services secure high profits. These two generate the majority of all operating profit. That profit is reinvested in logistics networks, data centers, and AI infrastructure. Investments at a scale of $50 billion annually. AWS's strength has shifted beyond just high profitability to having AI infrastructure as a package. Generative AI services, custom chips, large-scale power procurement. This continues to widen the gap with competitors. Barriers to entry strengthen year by year. This is Amazon's true strength. Now, let's organize today's analysis. Here's the summary. First, the dual nature of the profit structure. The e-commerce business operates on thin margins under 3%, but in 2023, the North America segment turned profitable and profitability improved. Meanwhile, AWS operates at ultra-high profitability, approaching a 30% margin, accounting for roughly 67% of total operating profit. Retail is a means to acquire customers. The cloud business is the core. Second, establishment of multiple revenue streams. Subscription services overall generate $40.2 billion annually. Advertising generates over $47 billion annually, making it a major player in the U.S. digital advertising market. And with Prime Video ad introductions starting in 2024, TV advertising budget capture has begun. Third, strategic reinvestment. Infrastructure investments at a scale of $50 billion annually are directed toward logistics networks and AWS data centers, power procurement, and generative AI infrastructure, and this cycle of continuously reinvesting profits into growth continues to widen the gap with competitors. If you were an investor, how would you evaluate this revenue structure? E-commerce is the bait. The real prize is cloud and data. Let me know your thoughts in the comments. Thanks for watching. If you want to understand how companies around the world generate profit and grasp the essence, this channel will help. Not emotions, but facts. Not opinions, but numbers from financial statements, revealing the truth of business models. Subscribe to the channel, and let's dissect the essence of companies together next time. Turn on notifications, and every time a new analysis is published, your business understanding will level up. See you next time.